Hi, jewelers. Welcome back to the channel, Financial Jewels Investing. Thank you for your support. Please like this channel and subscribe so we can help the YouTube algorithm give this channel some legs so the message of financial freedom can spread faster than a rumor on a high school campus. Jewelers, today's topic is lottery versus investing. We will talk about the difference between the two. We will look at the beginning of the lottery system. We will look at some statistics, and then we're going to compare the two. Hopefully, by the end of this video, you will make sound decisions when it comes to buying lottery tickets versus investing in the stock market. License subscriptions are absolutely free, so please invest in this channel by liking and subscribing. So jewelers, let's go. Hi, my name is Mickii G. I'm an educator and an investor. I am on a mission to get all of you to have the basic financial knowledge that you need to be financially free and potentially retire early. On this channel, I break down everything investing and I empower you with knowledge and wisdom so you can make sound financial decisions, and that will help you build generational wealth. So let's look at the history of the lottery system. The word lottery comes from the Dutch word lot, meaning fate or chance. So the lottery system is strictly based on chances and luck. The lottery system started as a way for the government to raise money without raising taxes. So they needed more money to take care of things, and they did not want to raise taxes because we all know raising taxes is frowned upon. The lottery system is known as a voluntary tax. It's a tax that you voluntarily participate in. In the late 1800s, there were so many scandals tied to the lottery that every state ended up banning the lottery. However, in the 1960s, New Hampshire decided to buck the system. They started to go back to a state's lottery system, and every other state decided to follow suit. So now we have about 45 states that actually own their own lottery system and several different private lottery systems as well. So now let's look into some statistics about the lottery. So who do you think play the lottery the most? Who do you think buy lottery tickets? According to the Motley Fool, it is male and also lower household incomes. So males buy more tickets than females, slightly over, and those in the lower income bracket buy more tickets than those in the higher income bracket. That is why the lottery system disadvantagedly and unproportionately affect those who make less money. Those who cannot afford to give away their money are the ones who are actually giving away their money in exchange for what they believe is hope of a dream. But that dream is almost impossible to attain. Winning the jackpot, the Powerball jackpot, it will take you 1 out of 292 million chances. Guys, you have a better chance of being struck by lightning and at the same time touching a rainbow. The math is brutal when it comes to the lottery. Only about 40 cents of that $1 is put in the winning pot. The other 60 cents, the state takes it and replaces it for the funding for education and scholarships and infrastructure. So essentially, when you buy lottery tickets, you are paying for the infrastructure, you are paying towards education. But here's the caveat. The state is not using this money on top of what they've already funded for education and infrastructure. They are using your money and they are replacing it with the funding they should have already there. So essentially, your lower income individuals are the ones paying for education through the lottery system. Now remember, the lottery system, it is a voluntary system. So if you do not go out and you purchase these tickets, then you are not paying that tax, because essentially that is what it is. It is a voluntary tax. Jewelers, ask yourself, why is it that the top 1% are not buying lottery tickets, but the lower 10% is? Well, the answer is simple, because they know buying lottery tickets is not an investment. It is a bad financial decision, because you're not building anything. You are just paying for a chance and a possibility to win something. And that chance is a very, very small chance. It is less than 0.0000001%. So the lottery doesn't sell tickets. It sells imagination. It sells false hope. It sells the pretense that this could be you. And even if you were to win the lottery, you will not win the amount of money that you put back. More people have lost in the lottery than they have won. If you speak to an economist about the lottery system, he or she will most likely tell you that the lottery is a voluntary tax on people who are bad at math. It is a government-run revenue system that is funded by lower and middle-class players, that is built on psychology, hope, and low probability. So jewelers, if you are spending your hard-earned money on lottery tickets, you may want to shift that way of thinking, because buying a lottery ticket is a losing strategy. Instead of buying a lottery ticket, you can invest that money into the stock market through purchasing an ETF like VU or VTI. And if you need more information about those ETFs, please watch this video or this video. Jewelers, now let's do the math. The average lower income household spends roughly $2,500 a year on lottery tickets. If you were to take that money and just put it in an ETF for over 10 years, let's use our investment calculator to see how compound interest will work in our favor. In my best ETF series, one video was about VU, and in that video, you saw that VU had an average return of about 14% over the past 10 years. So we're going to use that return. So if you put into your investment calculator, we're starting off with $2,500, and we're going to put that money and just sit and forget about it. After 20 years, we're going to give ourselves a 14% return, similar to what we've been seeing with VU. And then we're going to add $2,500 every year. So instead of buying lottery tickets, take the $2,500 and put it into VU every single year. After 20 years at 14% return, you will see a whopping $261,000 return. Now, I know what you're thinking. What? Yes, buying lottery tickets is a slow, draining habit. You don't see the effects of it immediately, because the tickets are $1, $5, $10. The average person is not buying $100 ticket. Jewelers, even at $25 a month for 20 years, you will have close to $30,000 invested if you keep the money in VU for 20 years and your return is about 14%. So investing outweighs buying lottery tickets any day of the week, any time of the day, and any month of the year. It is clearly an eye-opener to see what a small fractional investment can do over time. Jewelers, I hope that you can see that when you buy a lottery ticket, you're not investing. You're just spending money on hope. When you invest in the stock market, you are investing in a physical company that produces a product or provide a service, and that company has the opportunity to grow. And when that happens, your funding grows as well. So lottery versus investing, it's not even a question. Financial Jewels is here to help. You can reach us by emailing us at financialjewelsinvesting@gmail.com, or you can follow us on Facebook, Financial Jewels Investing Facebook page. Please like the video and subscribe to the channel. Help YouTube recognize this channel so it can share more videos to new viewers so we can continue building our financial knowledge. Thank you once again. See you on the next video.